We are so that you're going to have to take risks, but we've been given the gift. That whole retirement crisis video that I did way back when, I said, listen, the gift is crypto. That was 2016 or something. And that gift is the gift that keeps on giving. It is everybody's chance to get ahead. It's so important that you don't mismanage the opportunity. Many people did that in the last cycle, and I'm trying to help people this cycle. Own the main assets. Don't trade around. Don't have FOMO. Don't use leverage. Just hold it. Just give yourself 10% of your bag, or 20% if you're really a true degen, to allow yourself to invest and lose money and try and make money in the 100x's. But don't touch your other stuff.
Over the past year, Raoul Pal, the CEO and co-founder of Real Vision, has consistently emphasized one critical piece of advice for investors: to stay ahead of what he refers to as the fourth industrial revolution, or the exponential age. Pal, a renowned macroeconomic expert, recognized the significance of this new era upon observing several key developments. Firstly, he noted the unprecedented scale of money printing by central banks, including the Federal Reserve, which has inflated asset prices, creating a deceptive bubble. Secondly, the pandemic has rapidly accelerated the adoption of at least 10 technologies, such as e-commerce, delivery robots, autonomous driving, video conferencing, and telemedicine. Pal observed that, when adjusting for the Federal Reserve's balance sheet, these technologies are not in a bubble. Instead, their perceived overvaluation is a result of the dollar's significant devaluation. His analysis led him to conclude that the valuation of these technologies is set to grow exponentially in the next decade. Therefore, he advises investors to position themselves ahead of this technological revolution before prices soar beyond reach. Pal points to the global economic reset of 2008, noting that the major economies have since been grappling with stagnant demographic and productivity growth, alongside escalating debts that have reached 100% of GDP in many cases. As these economies now face a pivotal moment, exacerbated by unchecked monetary expansion by central banks, Pal argues that enhancing productivity growth is the only exit from this GDP predicament. This scenario underscores why he is highly optimistic about the potential of cryptocurrency and technology as critical asset classes. Pal's ongoing series, Unveiling Your Future, delves into the myriad economic challenges currently faced globally and how investors can gain an edge by investing in cryptocurrencies and technological stocks. He portrays the ongoing cryptocurrency bull market as a monumental opportunity that investors should not overlook. As the video progresses, viewers are encouraged to engage by liking, subscribing, and turning on post notifications for future content. Enjoy the insights and strategic foresight Pal offers on navigating the complexities of today's economic landscape and capitalizing on the exponential growth of cryptocurrencies and technology.
The Everything Code is really all about understanding that they are paying the interest on the debts by issuing more debt, and that ends up in the bank balance sheet. It was also the understanding the world has become entirely cyclical now. The ISM cycle is perfect from one to the next. So we've got this amazing 4-year cycle. It's actually 3.5 years. And that was in fact driven by debt maturity. What we found is that after 2008, well, 2008 was a great reset, as we know, but it was also a debt jubilee. All of the major central banks around the world agreed to forego interest payments. That's what zero rates are. So they said, we don't need to pay interest payments because we need to rebuild our balance sheets. So they rebuilt their balance sheets by refinancing in the 3 to 5 year sector, and that's created this perfect cycle. This cycle, which is the presidential cycle, the Bitcoin halving cycle, it is the Everything Code cycle. And that cycle drives everything. It's why I've been able to do so well in predicting where markets are going, because that cycle is the liquidity cycle, the debasement cycle. It's all one thing, and it drives assets. Once you understand that, you understand most of the game that lies ahead. Now, this is not the first time this has happened either. The 1950s were remarkably similar. This time around, it wasn't a demographic bust that caused it and the debts that came because of demographics. The last time around, it actually came from obviously World War II and those debts. But what did the governments do? In the US, they imposed yield curve control, which is financial repression, which is the same as adding things to the balance sheet. So they kept interest payments low. The economy, they restructured debts. The economy became perfectly cyclical, just as it is now. It's almost identical. And asset prices correlated entirely. So they ripped higher, corrected, ripped higher, corrected every cycle, as they're doing now. So that whole 1950s thing actually plays out perfectly in the equity market. When I look at the chart of now versus the 1950s, it looks very similar. And when I zoom out, it kind of suggests what's going ahead. You see, in the 1950s, their piece of magic was to keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts, and over time the economy took off and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get... If you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year. So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize that most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only two assets that have gone up. And I've talked about this at length before. It's technology and it's crypto.
Pal is profoundly optimistic about the future of cryptocurrency prices in 2024 and beyond. As a distinguished investor, macro analyst, and former Goldman Sachs executive, he sees the cryptocurrency sector as a unique opportunity for investors to not just earn a modest sum but to amass wealth that could shield them from the grim realities of global economic challenges, potentially setting the stage for generational wealth. This opportunity, according to Pal, is unparalleled and exclusively characteristic of cryptocurrencies and other digital assets. His projections for the industry are notably bullish, with a conviction that it will expand tenfold to reach a valuation of $1 trillion in the near future, and surge to an astonishing $200 trillion thereafter. Pal's primary concern, however, is that many investors may jeopardize this once-in-a-lifetime opportunity by resorting to leverage and pursuing short-term, high-risk returns, thereby losing focus on the critical strategy of long-term investment and holding onto their core cryptocurrency assets. Let's delve further into the interview.
Since I first started talking about Bitcoin, it's up 450,000%. Most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way. So we see the rise of not only tech investing on Robinhood, but option investing on tech in Robinhood. That's the way, the lottery ticket economy, where people just don't feel like they have a choice. There's no way for them to get the 100, 200, 300 grand that they need to get in the property ladder, or to feel like they've got the savings that they need. So people are taking bets, but in a secular market, actually pretty intelligent risk taking, and options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of all of these dot plots of risk-adjusted rewards of assets, and there's like, tech is quite high, and some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time because it doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a f***ing alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted. Any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer, this year, will be the best performing asset in the world. Crypto Fall, next year, will be the best performing asset in the world. Crypto Winter, which is 2026, will be the worst performing asset in the world. It's kind of simple. You don't need to do anything. You just need to buy it and hold it.
The foundation is set for the cryptocurrency sector to flourish and evolve in the upcoming years and decades. Raoul Pal highlights a key turning point, the approach of a significant macroeconomic summer, characterized by a sharp rise in global money supply as central banks rush to prevent their economies from collapsing. Connecting the dots reveals a picture of surging money supply, simultaneous growth in various technological platforms, and at the heart of this transformation, the cryptocurrency industry. Cryptocurrencies have repeatedly proven themselves as the leading contenders in this race, achieving unprecedented adoption rates with 400 million users faster than any prior technology. Bitcoin, the flagship cryptocurrency, has attained mega cap status in just 15 years, outpacing giants like Berkshire Hathaway and Meta in market capitalization. Despite persistent attempts in the United States to undermine the industry, its resilience and growth amidst adversity provide a strong basis for optimism about the future of crypto and macroeconomic trends. What are your thoughts on Raoul Pal's predictions for cryptocurrencies, tech stocks, and the broader economic landscape in 2024 and 2025? Share your comments and predictions for your favorite crypto assets below, and make sure to like this video, subscribe to the channel, and turn on post notifications for more updates. Thank you for watching.